What is DeFi? A beginner's guide to decentralized finance. Decentralized finance is also known as DeFi, pronounced DeFi. It is the umbrella term that describes the crypto universe that aims to build a new internet-native financial system using blockchains to replace trust mechanisms. You will want to stay to the end where I reveal the secrets to learning crypto like a pro and prevent the pitfalls and expense that new cryptocurrency traders experience. And a little disclaimer, this information is not investment advice. It is for educational purposes only. Any investment involves risk. Please invest wisely, and having said that, we hope that this video provides you with information that is of benefit to you. How does DeFi work? Decentralized finance, DeFi, an emerging financial technology, is based on secure distributed ledgers that are similar to those used in cryptocurrencies. This system eliminates banks' control over money and financial products. Understanding the differences between DeFi and centralized finance is key to understanding decentralized finance. Central finance means that your money is held in banks and corporations with the overarching goal of making money. There are many third parties that facilitate money movement between people. Each one charges fees. Let's say, for example, you buy a gallon milk with your credit card. The merchant charges the acquiring bank. They then forward the details to the credit card network. The network charges the merchant and asks for payment from your bank. Your bank approves the charge, and the payment is sent back to the merchant by the acquiring bank. Each entity in the chain is paid for their services. Generally, merchants are responsible for paying for credit and debit card use. You might not be able to use the bank's services while you are traveling for any other financial transactions. Decentralized finance eliminates intermediaries, allowing merchants, individuals, and businesses to transact through emerging technology. Peer-to-peer financial networks use connectivity, security protocols, and other hardware advances. You can borrow, trade and lend from anywhere with an internet connection. Software that records and verifies financial transactions in distributed financial databases allows you to access them from any location. It is available from many locations. The distributed database collects and aggregates information from all users, and uses a consensus mechanism for verification. This technology allows anyone to access financial services from anywhere, regardless of where or who they are. The DeFi apps give users greater control over their money with personal wallets and trading options that are tailored to them. In the real world, DeFi. The term DeFi can be used to refer to a financial app that runs on blockchain technology and uses smart contracts. It could also refer to the space for such applications or the community that creates them. DeFi refers to using code to replace trust. Imagine that you were lent money by a friend. You would have to be able to trust your friend not to change his mind on the terms or decide that he wants his money back earlier. Or move to another country with your collateral. You could ask a bank to be an intermediary if you don't trust him. They would still charge you a fee. They would charge you a fee to make sure that your friend doesn't change his mind. Code could be used instead of trust. Let's say you had both accounts on a blockchain. You gave your friend control of some funds in yours and your friend took over funds in his. Plus, you got some interest to keep them there for a while. This could be programmed into a smart agreement that would enforce the agreement in a permanent manner. Your friend would not have any more control over the funds than he was supposed. It is essential for our survival. Decentralized finance, or DeFi, is a term that describes a system where financial products are made available via a public, decentralized blockchain network. They are now available to everyone, instead of being controlled by middlemen such as banks and brokerages. Anonymity and DeFi. Decentralized finance allows third parties to take control, but it does not allow anonymity. Although your transactions might not be identified by you, they can be traced back to the entities who have access. These entities could be law enforcement agencies, governments, or any other entity that exists to protect financial interests. DeFi and blockchain technology. Blockchain technology is used in decentralized finance. Blockchain is a distributed, secure database or ledger. Applications, called dApps, are used to manage transactions and run the blockchain. Transactions are stored in blocks on the blockchain and can then be verified by other users. Once the verifiers have agreed on a transaction, the block will be closed and encrypted. A new block with information about the previous one is created. Each block is chained by the information contained in the next block. This gives it its name, blockchain. It is impossible to change information in blocks before they affect the next blocks. This, and other security protocols, is what gives a blockchain its secure nature. What is the DeFi exchange platform? DeFi is open, global, peer-to-peer, pseudonymous and open for all. DeFi uses smart contracts, which are automated, enforceable agreements that don't require intermediaries and can be accessed from any computer with an internet connection. One of the key premises behind DeFi is peer-to-peer financial transactions. Peer-to-peer DeFi transactions are where two parties agree that they will exchange cryptocurrency for goods and services with another party. This is how you would get a loan through centralized finance. To apply for a loan in centralized finance, you would need to visit your bank or another lender. You'd have to pay interest and fees if you were approved for this lender's services. However, peer-to-peer lending through DeFi does not mean that there will be no interest or fees. It does, however, mean that you have more options as the lender can be located anywhere in the world. DeFi allows you to use your DE app, a decentralized finance application, to enter your loan requirements. An algorithm will match you with peers who meet your needs. After that, you'd need to accept one of the terms from the lender to receive your loan. Is DeFi a cryptocurrency? It's a generic term that refers to the crypto universe that is focused on building an internet-native financial system using blockchains to replace trust mechanisms and intermediaries. What is a DeFi? DeFi is a financial application that uses blockchain technology to enable digital transactions between multiple people. Blockchain is an open ledger that records digital assets and cryptocurrencies. DeFi can include lending crypto, investing crypto, and sending crypto. Stablecoin and DeFi. Stablecoins can be described as cryptocurrencies whose value is tied to the value of a government currency like the US dollar. DeFi uses cryptocurrency to facilitate transactions. It is still in development, so it is hard to predict how existing cryptocurrency will be implemented. Stablecoin is a cryptocurrency that has been backed or tied to fiat currency such as the dollar. Stablecoins are an essential part of DeFi markets. If you are a crypto investor, it is not a good idea to keep your assets in cryptocurrencies that can fluctuate greatly. A crypto coin should behave like a stable, boring dollar that you can use with TradFi. Intermediaries are needed to send and receive money in traditional financial systems, such as banks or stock exchanges. All parties must feel confident about the transaction and have faith in intermediaries to act honestly and fairly. DeFi eliminates these middlemen and replaces them with software. Instead of trading through stock exchanges or banks, people trade directly with each other, with blockchain-based smart contracts doing the job of creating markets, settling trades, and ensuring that all parties are fair and trustworthy. DeFi also includes prediction markets, options, derivatives, lending platforms, and other services. Wall Street versus crypto. Crypto people are basically creating their own version Wall Street. It is decentralized, deals only in crypto, and offers crypto versions of many products offered by traditional financial institutions. There is also less regulation and red tape. Is it safe? DeFi is essentially unregulated and has fewer consumer protections than traditional financial systems. The evolution of decentralized finance is still in its early stages. It is not regulated. This means that the ecosystem is still plagued by hacks and other infrastructural mishaps. Current laws were created on the basis of distinct financial jurisdictions with their own sets of rules and laws. DeFi's ability to conduct transactions across borders presents important questions for this type regulation. Who is responsible for investigating financial crimes that occur across borders, protocols, and DeFi apps? How would regulations be enforced? Problems with DeFi. Existing financial regulation may also be affected by the open and distributed nature of decentralized finance. Other concerns include system stability, energy needs, carbon footprint, and system upgrades. Before DeFi can be considered safe, there are many questions to answer and new developments. Financial institutions won't let go of their main means of making money. If DeFi succeeds, it will control how you access your money. Bitcoin versus DeFi. Bitcoin is a cryptocurrency. DeFi was designed to use cryptocurrency within its ecosystem. Bitcoin is not DeFi, but it is part of it. What is TVL? DeFi is total value locked, or TVL. According to DeFi Pulse, the current value of DeFi's total value locked, or TVL, is $77 billion. This is a standard method of measuring the crypto assets in DeFi projects. If it were a bank, this would make DeFi the 38th largest bank in America by deposits. Total value locked, TVL, is the sum total of all cryptocurrency that has been staked, borrowed, deposited in a bank account, or used to perform other financial actions. It could also be the sum of specific cryptocurrency used for financial activities such as Bitcoin or Ether. How do you invest in DeFi? DeFi is a set of smart contracts that perform financial functions such as lending or trading cryptocurrency. While Bitcoin can send and receive information about the amount of Bitcoin one has, Ethereum can store code on its blockchain, also known as smart contracts. DeFi investments. Investing in cryptocurrencies or other initial coin offerings, ICOs, can be highly risky and speculative. What is the best way for a beginner to invest in DeFi? First, make sure your wallet supports Ethereum. It can also connect to DeFi protocols via your browser. MetaMask is an option. Second, purchase the appropriate coin for the DeFi protocol that you intend to use. Most DeFi protocols are currently based on Ethereum. To use them, you will need to purchase ETH or an ERC20 token. Coinbase is a DeFi platform? Coinbase makes DeFi easier and more accessible. With just a few clicks, eligible users can now access DeFi's attractive yields from their Coinbase account. Are stocks available on DeFi? There are also a few smaller exchanges. Coinbase is the only exchange that is publicly traded. This makes Coinbase one of the best DeFi stocks to invest in. Coinbase's main platform allows users to easily buy or sell cryptocurrency. Are you looking for a DeFi wallet to keep your money safe? A DeFi wallet is one of the most essential requirements to use DeFi protocols. DeFi lets you become your bank directly without the need for intermediaries. DeFi products can be accessed securely and easily through wallets. Why do I need crypto DeFi wallet? DeFi is core. Wallets enable users to access new financial products via a cryptocurrency gateway to Web 3.0. This allows them to have freedom, transparency, and ownership of their assets. Are DeFi wallets secure? Is it safe to use DeFi wallets? DeFi wallets are among the most secure on the market. You are in complete control of your destiny. In many cases, customer support is not available to reset your password if you have lost your seed phrase. How can I withdraw money from my DeFi account? Log into your off-ramp and copy the address from your wallet. Click Send to send the asset to your off-ramp. Depending on your wallet setup, you will be prompted to enter the address in the box provided by DeFi. What is Binance DeFi staking? Binance DeFi staking is now offering a high-yield activity. To earn up to 13.33% APY, stake your BUSD between March 24, 2022 12:01 p.m. UTC. DeFi staking format: first come, last served basis. Reward calculation period: 0 o'clock UTC on the day following DeFi staking has been confirmed until redemption. What are the risks of DeFi staking? Due to volatility in the holding period, DeFi staking can be very risky. Even if you earn decent interest on your stakes, the price of crypto could drop at any time, leading to you losing money. You won't be able to sell your crypto or rewards right away because it can take several days to unstake. Is Binance DeFi staking legal? Funds are secure. Binance only selects the most promising DeFi projects and continuously monitors it while it's in operation to minimize the risk. DeFi staking allows for higher earnings. What is a DeFi stake pool? Staking pools allow multiple stakeholder, or bag holders, to pool their computational resources in order to increase their chances to be rewarded. They essentially combine their staking power to verify and validate new blocks. This increases their chances of receiving block rewards. Now for my secret to learning crypto like a pro, and that was I joined the Cryptoversity, where you can learn quickly and easily on how to get into crypto, trading and enhancing your profitability. Link in the description below. And that sums up what is DeFi? With your beginner's guide to decentralized finance. If you would like to know more about the cryptocurrency world, check out our other informative videos. Hit subscribe and never miss another Bitcoin and cryptocurrency video again.